All right, we want to turn now to the latest on the stock market. The White House is pushing back against growing fears of a recession after yesterday's brutal day on the U.S. stock market. The Dow Jones, S&P 500, and Nasdaq all slumped, with Nasdaq seeing its largest single-day loss since 2022. In Europe, most major markets opened slightly higher today, but in Asia, fears of an American recession dragged stocks down. To help us unpack what is happening, I'm joined now by financial commentator Jon Erlichman. Jon, good morning to you. So explain it to us simply, please. What caused the big sell-off yesterday, and what are the futures pointing to today?
Well, right now it looks like there could be a little bit of buying, but we'll find out. It's a very cautious market, Marcia. And what led to this selling was really a roadmap that's been forming over the last few months. You know, Kelsey's talking about people looking for green outside. They're definitely looking for signs of green in the stock market. And we had seen a lot of green. We had seen two amazing years for stocks, both in Canada and the U.S. People thought this was going to be another big year for stocks because Donald Trump was seen as this business-friendly president. Then very quickly, with all the government spending cuts and the tariff worries, confidence started to decline. And investors sold some of the easy targets, tech stocks that have been these big high flyers. But still, investors thought, well, Trump can't be that serious. He's got to be watching the stock market. But his messaging to the market had been that he's not concerned about the stock market in the short term because he wants to get these long-term plans in place. That continued to weigh on confidence. But not just that, Marcia. We started to see countries around the world react. We saw Canada respond with its own tariffs due to the tariffs that targeted Canada. We saw with the geopolitical jitters in Europe, military spending starting to ramp up. So you started to see a flow of capital away from the U.S. based on that. I'll remind the audience that European stocks are actually up this year. And now we're at a point where investors are wondering if there are signs of a U.S. economy weakening. I mean, we've already seen signs of it in Canada. Does the central bank there cut interest rates? And the message so far has been, doesn't look like we're going to see that because they're still worried about inflation. Now you're starting to see all of that play into corporate speak. This morning we had Delta, big airline operator, which just a couple of months ago had a pretty constructive outlook for the market. They are saying that travel demand is weakening. And let's not forget that while there's a story about Main Street and Wall Street, a lot of wealth for a lot of people is tied up in the stock market. So when you start to see weakness there, people start worrying about the same things we've been talking about during the tariff story. You know, do I want to travel to the U.S. right now? And now we get to see where things go. But for now, it's been a rotation into safer stuff, so-called defensive stocks, rather than tech, like Tesla, which had a big run.
All right. You mentioned Trump watching the stocks. We all know he watches the stocks, Jon. He watches them really closely. And we know that the markets do not like uncertainty. I want to ask you lastly then about the ongoing tariff threat. Trump says his reciprocal tariffs will kick in on April the 2nd. The blanket 25% tariff on Canada is set to resume that same day. So should we expect more of the same over these next few weeks?
Well, I think, you know, Canada's response has obviously been, we'll take our tariffs off when we know the certainty on the tariff story in the U.S. Stock market is kind of the same way. Until there is certainty on that issue, there will probably be some jitters in the market. I guess I would leave, Marcia, investors and audience members with this reality, which is corrections in the stock market. I know it can be fearful when you're looking at, let's say, your investment portfolio. They're quite normal. They tend to happen almost annually. And we're now into this third year of a bull market. And history suggests the early days can be choppy. And obviously, this feels like a unique moment because of the tariff uncertainty. But there's always something that gets stocks at a certain point. And so there is still a belief out there that this could be a positive market overall for the year. But it is going to depend on where the economy lands and where Trump ultimately decides he wants the economy to land with this longer-term tariff story. So I think the unknowns exist today. We don't have the answers to that question right now, and the stock market is reflecting that.
Jon, really great to see you this morning. Joining us is financial commentator Jon Erlichman on the market.
If you like that video, make sure to subscribe to the Your Morning YouTube feed, where you can find all kinds of new content posted every weekday morning.